Hi, welcome to the Market Alert for Tuesday, the 30th of April 2019. Already the end of April. Amazing how quickly the time goes. Looking at the pound for yesterday, the market was sideways and then eventually broke down to the 200 bar moving average and then closing back with profit taking and the market moving back up. But the whole of the range for yesterday was really narrow, as you'll see here from the high to the low. All we had was 41 pips there, very quiet. And again, you know the reasoning why it's quiet at the moment. And overnight, the market still above the 200 bar moving average, above the DP, and sort of sideways there as well at the moment. News today, there is no news there apart from this one where we want the consumer confidence for the US at 3 p.m. This is to show a slight increase there to 126, and the Dow certainly needs something to move it higher. If we look at yesterday's daily chart first, you can see the market trading up to the 76% retracement that we drew in yesterday morning's alert. The market sideways on the overnight, still looking fairly weaknish. Now, I have a theory here, and probably a complete waste of time, but the market has stalled, and anything that's going to move this market higher, and after the drop down in December, from September through to December, when Trump had a word in Powell's ear, and he said that he wasn't going to increase interest rates going forward, there may be a surprise in the system that the market's waiting for, that Powell comes out and says, actually, we've re-looked at the data, and we're going to cut interest rates. That's going to be the first thing going forward. And the market seems to be just stalled at the moment. It looks tired, and it looks like it needs some sort of correction in there as well. And yesterday, you can see how it started off. The market sideways. We've got a 76% retracement here as the market weighted and retraced, which you can see there. Well, 62 in fact, between 62 76, and then the market just drifted up during the day. But again, you can see how narrow the range of this market was yesterday. Very quiet, and the reason for this is the market's waiting for the FOMC minutes tomorrow evening, which is what I'm saying is the only thing that's going to ignite this market at the moment is something like Powell coming out and saying that he intends to reduce rates to make sure the economy continues to move, because there's nothing that's moving this market to the upside at the moment. And even on the overnight, you can see prices coming back, being tested there, a bit of selling here, and managed to trade back up to the DP level, but not above the 200 bar at the moment. So the market is likely to, whatever direction it takes today, is likely to maintain that in preparation for tomorrow's FOMC. But it is really quiet. And also, as I spoke about yesterday, the implied volatility coming in at 11.17 a week ago was 10.70, and this has taken us back down to the levels that we saw in September, 9.51, which you see here. And once we got down to these levels, the market correcting, and the same here. So when it becomes incredibly quiet, it looks like there's no risk in the market. That's when you get the explosive move in the implied volatility. But of course, this is the opposite, and in the underlying market, you get the move to the downside, significant move there, and then the market trying to pull back. So when there is complacency and the opinion that there's not much risk around, then that's when things come and take the market by surprise. And again, given that the old adage, sell in May and go away, and that means if you were a buyer of stocks, you would sell your holding and clear off. Now, I did some research on this a few years ago, and of course it's not 100%, but it is there's certainly a pattern there that is worth mentioning. but we'll have to wait and see. Last year wasn't the case. The market continued sideways to higher, but given the backdrop now of the lows in the implied volatility, it will be interesting to see how this pans out. And then finally in Bitcoin, well, it's just been sideways since we had this pullback to the 76% retracement. The market is sitting on this. The range is just simply too narrow to trade once again. So again, we just have to stand aside until the momentum comes into this market. It moves from the stock markets and everybody's interested in cryptos again, but at the moment it's just very, very quiet. And there's not a lot we can do about this at this time. We just have to live with it. It's very strange at the moment because everything seems to be fairly quiet and range bound, and obviously waiting for some sort of political or geopolitical news to hit the markets at this time, because even with the economic news, it's not really doing a lot at the moment. It's not responding to that. It seems to have shifted away to things like Brexit and also trade deals that Trump has been trying to do with China. So the market desperately needs some news, whether it's a rate cut or whatever it is. But if they do cut rates, then be assured that the market will think that the Fed have lost control and they were wrong, and the rally there will only be short-lived. You'd only see something like the market going back to the all-time highs in the Dow, up to the 26,953, and then selling off from there as well, given the backdrop in the lows in implied volatility and, like I say, the seasonal effect of the May situation. Okay, that will do it for this one. Let's see what pans out today. I'm expecting it to be quiet as the market waits for the FOMC minutes for tomorrow. And with that, as ever, thanks for watching. See you in the next one.